There is no easy way to become rich. It requires a lot of hardship to mint money and patience to let it grow once invested wisely. But how should one go about investing in right investment instruments? Should one opt for SIP route or should opt for a lump sum route? How can you maximize the power of compounding? To help you guide with your portfolio planning, we have Misbah Baxamusa, CEO of NJ Wealth with us. Misbah, good evening. Welcome to the show. And today we are going to touch upon a very important topic, whether you should be investing through an SIP route or a lump sum route. But before that, one very important question, a very basic question, okay, which a lot of time even our viewers land up asking us, when is the right time to start investing? Should we just put our money now, we should wait, or have we just missed the bus?
Yeah, Kavita, I think so. You started with a very valid point that investment is all about, taking the right steps and having patience. So, to our belief, to really create wealth over a longer period of time, first thing every investor should understand that they need to invest into an asset class which gives you a real rate of return, meaning that the return above inflation. And I think so equity is one of the, a proven asset class where we have a very long-term history available, which gives you that real rate of return, which helps you to actually increase your purchasing power over a longer period of time, which is the need of any investors. Now, a lot of people tend to probably time the market, and most of the bus gets missed out in the single name, that is, I still want to wait to probably invest. And because of that, most of the buses gets really missed out. To us, as you rightly said that, if I have a money in my pocket and I want to invest, to us, any day is a right day to invest into equity market. Only thing one needs to be very sure about that, the tenor of the investment needs to be long. We generally recommend tenor of more than 10 years. And if the tenor is more than 10 years, he can any point of time invest into an equity. Having said that, what proportionate of his total wealth he needs to invest into an equity is the function of his asset allocation that he chooses for. And for any investor, this asset allocation is extremely important to determine for himself, which definitely he can take some help of any of the right people or a distributor, decide what is the right asset allocation, and just go about investing rather than really timing the market, because I don't think so anybody knows about the timing of the market. And to us, every day is a right day for starting an investment, provided you invest. That is something which is very, very important.
All right, so let's deep dive in the discussion now, whether to start investing through a lump sum route or an SIP route. Just explain us the difference between the two first.
Yeah, great. It's a very simple it's a very nice question, but a very relevant question.
Right.
Lump sum money is that you have your money in your bank, and at one go, at a pre-decided asset allocation, you just invest into the market. That is what is called a lump sum investment. Against that, an SIP investment is a one in which you decide not to invest everything at one go, because you probably don't have everything at one go in your bank account, but you are probably receiving some amount every month in the bank account, which you are saving, and you are investing that at a regular frequency of time. That is what is known as systematic investment plan, meaning that you spread your investment over a longer period of time, because you don't have all the money that you require to invest at one go, right? So anything that you invest at one go is the lump sum investment, and anything that you invest regularly over a period of time is known as a systematic investment plan. So that's in a nutshell.
Now, explain me these strategies or these route of investment, Misbah, should be the same whether you go for an equity asset class or you move on with your investments into a debt instrument. How should one actually plan as to what should be the route for equity and for debt?
If I want to understand, Kavita, your question is that whether I should do a lump sum or an SIP is something that you're asking for?
Exactly, but keeping equity and debt in mind. So if it's an equity investment, should you opt for a lump sum or SIP, or
Yeah.
if it's a debt instrument, then should you be just planning and going for a lump sum route? Is that much better?
Okay. Yeah. So Kavita, I will try to make things a little simpler for an investor. First of all, every investor needs to have his own asset allocation in place. When I mean asset allocation is that as an investor, what is my risk-bearing capacity, right? If my risk-bearing capacity is more, I am able to take more risk to hunt for more returns. I can have a higher allocation to equity. And if I have a lower appetite for risk, meaning that I can't really see volatility, right? And I am happy with not creating a stupendous amount of wealth from my investment, I will have more allocation into debt. So any investor, A, would have an asset allocation in his mind, or probably if he's not having that asset allocation in his mind, I think it is very important for an investor first to decide as to in his investment portfolio what I need to have as far as my asset allocation is concerned. If an investor is first finalizing the asset allocation, which is right for himself, the rest of the investment journey becomes very, very simple. Meaning that if he has any money which is there at this point of time, which is lying in the bank account to invest, right? And if he has a very clear perspective of an asset allocation which he needs to follow, he will just go and invest that money into that asset allocation in a lump sum manner. So if it is 60-40 and I have 2 lakhs of rupees lying into my bank account, I will invest that 2 lakhs of rupees into 60% into an equity and 40% into a debt as far as the lump sum investment is concerned, right? So that's how you make your investment very, very simple and more logical to implement. According to me, an SIP is nothing but a saving habit. SIP is nothing but a disciplined habit, right? That you do over a longer period of time. It is not about whether you can do SIP in equity or you can do an SIP in debt. To me, you can do SIP in both, right? Because SIP inculcates the habit of regular savings, which is very, very important. It inculcates a discipline, right? Which you do on a very consistent basis over a longer period of time, not only helps you to save a lot of money, at the same time, it helps the money to compound and to get the returns, So it is not about whether you do an SIP in debt or for an equity investor, lump sum is good or SIP is good. To me, both the things are good depending upon your cash flows. Only thing which you need to remember as an investor is that equity is an only asset class which allows you to make money more than inflation and create stupendous wealth over a longer period of time. So whenever you have to decide, this particular factor should be there in the mind of the investor before he decides the right asset allocation for himself. And once the right asset allocation is decided, these modes of investment are just the function of how you can manage your cash flows. It is nothing but the function of your cash flows.
Sure. So, Misbah, now how does compounding work for lump sum and SIP investment? Because SIP, you are participating in different market rallies and movements. So, how does it work?
It's as simple as that. See, so when you do lump sum, and I'll just give you an example. I have 15 lakhs of rupees lying into my bank, and I decide to invest everything into an equity because I am a risk-averse investor and I want to make money from my equity investment. So when I do this for 10 years, I have 10 years of compounding available for me, right? And for the sake of assumption, I assume that I am able to fetch 15% rate of return on my lump sum investment. That 15 lakhs rupees after that 10 years period of time may grow to 60 lakhs of rupees. That's an approximate at the rate of 15% compounded annualized growth rate, right? Now, if I do decide that, to participate into equity market, I don't need to invest lump sum, but I will keep that money into the bank account and probably convert that 15 lakhs of rupees into 12,500 rupees of a monthly installment, which I will deduct from my bank and invest into equity market, because equity market can go up and can go down. and in the down market, I can get more units. In the up market, I will get, okay, I will not be too much affected. In that due course, if you do it for 50 for say 10 years, and in that case also, if you are able to get 15% rate of return, the 30 lakhs you have invested in through an SIP will probably, 15 lakhs that you have invested through an SIP would be somewhere around 32 lakhs, because you have not given every installment that 10 years, which you had given in the form of lump sum, right? So again, I will put it the same thing, this is how it is different between how this compounding works in lump sum as an SIP. As lump sum, you're putting everything at one go. You have a longer period of time available for your investment, because of which you will get that compounding effect more longer, as probably we will not get if the same amount you put it into the bank FD or into the bank and then convert it into an SIP installment. So again, I want to reiterate the same thing, that if your equity investments are long term, you really don't need to worry about the time of the market, because you have already have given time to your investment, which is far more important in any investment. Time to the investment is in equity investment is far more important than timing.
Exactly. So time to just get your fundamentals and basic right, and then further on you can build upon your investment. But because we have you on the show today, Misbah, we have very interesting callers also who've sent us their queries. And the first caller is from Malaysia, Kuala Lumpur. Neeraj Krishna is online with us. Neeraj, good evening. How are you doing? Thank you so much for sending us your query. Please tell us something about your investment.
Yeah, thank you for having me on the show. My question is, currently I'm about 35 years old.
Sure.
And my current portfolio mixes an Nippon large cap, HDFC, the opportunities fund, and SBI small cap, Parag Flexi Cap fund, and UTI Nifty index fund. So the quantum is about around 4,000 to 5,000 in each of these funds.
Sure.
Now, my question is, whether is this portfolio a good mix to generate a decent corpus of 2 crores in about 10 to 15 years?
Okay. All right. Thank you so much, Neeraj, for your query, Misbah. Let's begin the financial planning process. So 2 crores in 15 years. I'll just repeat the fund names for you. Nippon India Large Cap, HDFC Mid Cap Opportunity, SBI Small Cap, Parag Flexi Cap Fund, and UTI Nifty Index Fund. How are the funds in terms of market exposures to you, Misbah?
Very honestly, Kavita, to me, funds are not very important in any of the wealth building process. So I will try to keep myself away from, telling the investor whether these funds are right or wrong. I think so, to my understanding, to meet your end objective, the asset allocation that you decide, contributes 92 to 95%, so meaning that, in the long term, most of the funds tend to come to the average returns. Some period of time, some funds may perform good. Some time period of time, some funds may perform bad. But if you see generally over a longer period of time, if the fund houses are good, they tend to come to the mean. So having said that, it's more of a mathematical question that Neeraj sir is asking, right? Whether and it's a pure mathematics that how much of money I need to invest probably for 15 years to reach to my goal of 2 crores. And if I want to really work on that mathematics, there are various calculators which are available where you can assume the rate of return to probably get a number of 2 crores after 15 years,
right?
Which anybody can do and work on it.
Sure. So, Neeraj, one thing I think you also want to ask on small cap funds. So, if your time horizon is somewhere around 10 years or more than that, you can definitely have a mid cap, you can definitely have a small cap, but then you already have the same market exposure in a couple of funds already. You have a small cap fund. So, here what you may want to do is just maybe increase your investments, and that should be enough because you have a clearly longer time horizon. All right. Let's let's go on to our next query. We have Ajinkya Tope's question now for you, Misbah, and he's 40-year-old. The annual package is 50 lakhs. Started his SIP around in 2006. The funds are HDFC Sensex Direct Plan, Mira Asset Tax Saver, Tata Digital Direct Plan, and UTI Flexi Cap. He has as his fund mix. So Ajinkya has a daughter who is 18 years old, and she wants to pursue her further education in US in another 5 years. And clearly he wants to plan for his daughter's further education and better future. So explain to us what kind of a fund mix or planning is needed when you want to give a plan the education goal for your kid.
So what I want to understand, Kavita, what is an SIP amount which is running currently of his?
It's 2,000 each in all the 4 funds.
So around 8,000.
Yeah.
The first thing that has been done right is that I think so from 2006 an SIP has been started, right? Which very few people have been doing it and been consistently doing it for probably for a period of 16 years, right? 2 things which I wanted to tell. Again, I will not comment on too much on the mix of the funds, which I feel should be fairly diversified between mid cap, large cap, which he has fairly done. But one thing which I can tell him that this 16 years, there was a scope to increase the SIP amount, which probably I'm not seeing it, right? Because, doing one SIP at one level, there is always a scope to increase it, because if you would have done 8,000 rupees of SIP for around 16 years, somewhere anywhere between 60 lakhs to 1 crore of wealth he might have generated over the last 16, 17 years, assuming whatever returns has come probably in the past. And what I understood was the requirement is 5 crores of his retirement kitty and some money for her daughter or for his daughter, because probably this whatever savings has happened, probably larger portion would also go into ensuring that the education is on course. But if he really wants to take care about the another requirement, that is the retirement, and that's around 5 crores, I think so. Again, some calculation needs to be worked upon.
Absolutely, and the calculation also should have depreciating value of rupee, because currency really plays a very important role. But then, Misbah, we are actually out of time over here. So thank you so much for being on the show and helping our viewers on various aspects of financial planning today. It was a pleasure to have you on the show. Thank you so much once again.